G'day taxpayers. The door has just opened for a 50-point rate cut from the Reserve Bank on the 8th of July because inflation is below the midpoint of the target range. It's falling rapidly. It's at risk of falling below the bottom of the target band, and monetary policy is still restrictive. Despite those two rate cuts that we've seen today, we know that monetary policy's still got that python squeeze on the economy. The RBA's overhiked, been slow to cut, and the proof of that is now showing up in the inflation numbers, plain and simple. So in terms of the details, headline inflation in annual terms down to 2.1% in May, down from 2.4% in April. We've now had 10 months where inflation's been within the 2 to 3 target range, and as you can gather, a 2.1% inflation rate is remarkably close to falling below the bottom of the 2 to 3 band. So that's something that, with the economy still subdued, with some of the global geopolitical tensions that are clearly putting a downside on the global growth outlook, that the RBA better get a wriggle on, or else we're going to have a period of severe economic weakness coming through. The trimmed mean measure, for what it's worth, also fell sharply to its lowest level since November 2021. Annual terms down to 2.4% from 2.8%, so below the middle of the target band and decelerating at a rapid clip. The trimmed mean measure's been below 3% for 6 months now. So in terms of the RBA deliberations, I don't know what they need to see to lock in not just a 25 but a 50-point cut. We know that in the May meeting they considered a 50-point cut, and regrettably they decided against moving that far, but they can play catch up. They can not only deliver the extra 25 that they should have delivered, or many months ago to be frank, and deliver another 25 on top of that. So current market pricing only has a 25-point cut priced in, more or less. That might be changing as I speak with the market reaction to these inflation numbers. But the bottom line, inflation is low. It's at risk of becoming, dare I say it, too low, and it risks falling below the bottom of the target band, which is not a good thing. So the RBA needs to get rates at least to neutral, which is about 3.25%, if not slightly accommodative, if it's to prevent the economy extending this period of economic funk, if it's to prevent inflation being too low for too long. There you have it.